Hey folks, David Frost, my strategic forecaster here for another episode of Common Sense Market Analysis. Today is Friday, October 16, 2015. Well, we got to the number today. So this is the daily chart of the SPY, which mirror images the S&P 500. And today we got into the zone, right? Our zone was always going to be in this area up here. Okay, so today we got up into the zone and we went above the 202.89, and just ironically enough, let's take a look, and this is mainly for the intraday traders. Here's a 10-minute chart, and let's look what happened. So the first candle of the day, the first 10-minute chart of the day, popped right up above that line by about 13 cents, I believe. The high of that candle was 203.02. Our number was 202.89. And then we backed off, and the market came all the way back down to about 202 and a quarter. So that's a pretty good sell-off from the high. And as you remember, I always tell you that this is a good indicator. This candle right here, this doji candle, is a good indicator of a trend change. Whether that happens on an intraday basis, a daily basis, a weekly basis, whatever it is, all charts are the same. They all react the same way. So when we saw that, that was a good indicator that we were going to pull back, and that was a good intraday trade. And what we did was we just basically came and filled the gap, pierced through it a little bit, and then we made another run for that line again, and it failed one more time, and we came down even further. And then at the end of the day, being options expiration week, we had an end of the day ramp, light volume, and that was it for the day, and we came back up into that zone. Let's go back to the daily chart. So what happens from here? Well, we've satisfied the target. We've satisfied the 202.89, and we could go as high as basically 203.87, maybe even up to 204. I don't think we might go much higher than that, and that could certainly happen on Monday with an early spike in the day and maybe an intraday reversal. We'll have to see what happens. But as you know, I've been saying that I have a pretty good indication that Monday, the 19th, would be a turn day. And as a result of that, I've had a lot of, well, not a lot, I've had several emails asking me, how do you know that that's going to be a turn day? How do the cycles work? Can you give me a list of your cycle dates? It's not that easy, folks. I wish it was. I don't just have a list of dates in the future where cycles are going to play out and we're going to have a turn day. But what I can do is I can give you an indication of why this coming Monday, one of the indications, why this coming Monday is a good cycle turn day from a longer term perspective. So here, let's deviate for a minute, and I'm going to bring up a chart of the SPX, which is the S&P Cash Index. Okay, and what I'm going to do is I'm going to go all the way back to in the past. Did I get it? No, I have to change this. I need to go all the way back 30 years. Okay, and if we go to 1987, okay, and what's the exact date? The exact date is August 25th, 1987. Let's see where we are. We'll need to go a little bit forward here. August 25th, 1987. So here, we're getting close. I remember this. August 25th, 1987. Right here, okay, let me highlight this area. Okay, right here is an important high. Okay, it's not necessarily the high, it's not always the high, but when we pick out, when I do my cycle work, I pick out important highs and lows. And important highs and lows are typically derived when a market makes an important high and changes trend for some period of time. Whether that period of time is for several weeks, several months, or even several years, it's deemed an important high. We don't necessarily derive magnitude of change or magnitude of moves from cycle work. The cycle work is to determine turning points in the market. So when I find an important high from 1987 of August 5th, right here, okay, that is an important high, and I'm going to show you the next important high, which was Let me see if I can get it here. It was September 21st, 2001. I passed it. Okay, so here it is. September 21st, 2001. Okay, right here. Now that would be considered another important high. In fact, let me just scroll the chart over a little bit and you can see why it's an important high. Okay, it marked a turning point for a period of time, significant enough to mark an important turning point in the market. Now, the cycle work goes like this. I take an important high to an important low, and this wasn't the only important low after 1987 for sure. I just know that it was another important low to the prior important high, which was August 25th, 1987. Now, there were plenty of turning points in between those two numbers that I've used in the past for turning points in the market. But the reason why this is important is because what I do is I look for corresponding points in time. So, for example, let me explain. August 25th, 1987 to September 21st, 2001 marked 5,141 calendar days. Now, if I fast forward 5,141 calendar days from September 21st, 2001, this point right here, okay, this is September 21st, 2001. If I mark another 5,141 days, I come out with August 19th, 2015. Now, there are other turning points, there are other calculations, there are other points in time when I've used this cycle and the prior cycle, but I'm just suggesting that one of the calculations is as much as 5,141 days. There are others. There are 30-month cycles, there are 40-day cycles, there are 30-day cycles, there are 60-month cycles, there are 60-day cycles, there are 60-week cycles, there's all kinds of cycles. 45-day cycles, 45-week cycles, 15-week cycles, 21-week cycles, 21-month cycles. There's a lot of different cycles that I use. This is just one of them. I use weekly, monthly, daily cycles, but I also use cycles that go from an important turning point to another important turning point. And this one happened to be no significance other than it just happened to be 5,141 days, calendar days. Turning points could be trading days, they could be calendar days. They could be weekly cycles, monthly cycles, daily cycles. They could be a lot of different variances. They could be a lot of different numbers. That's why it's not an exact science. And those of you that have asked me for cycles, I've mentioned to you that it's both part art form, part science. And that's why it's not just as easy as I have a spreadsheet of dates in the future where the market is scheduled to turn. It doesn't work like that. What happens is the fact that I found this cycle of 5,141 calendar days on October 19th, coming up this coming Monday, it also coincides with other cycle turns or other cycle turning points that could be, for example, a 15-day cycle, a 30-day cycle, a 45-day cycle, or more. And when those cycles converge with a long-term cycle, such as over 5,000 days from high to low, back to potentially another high, it's something I want to make of note. And I'm giving that date to you because I feel it's an important date, meaning I believe the market should make a turn in and around that number, plus or minus a day or so. So the fact that October 19th is a cycle turn day in my work, I'm giving it to you saying, watch out, not watch out, but be aware that this should be another turning point because I have other turning points that coincide with the same date, October 19th. I know this may be confusing, and I'll do it again. I'll try and talk about this in pieces over time, but I wanted to try and give you the example of why this coming Monday was important. I got some questions on it, and what I'm doing is I'm trying to give you a flavor of how I derive some of these cycles. And that's how I do it. And let's go over to the daily chart of the SPY. And what I think is going to happen is I think Monday we may see a little more upside and we may see the first indication of a market turning point. What would that look like? It may look like a doji candle on Monday. It may look like a reversal candle Monday. It may be on volume. Maybe it's Tuesday. Something like that. Now is at the point when we're looking for signs of a reversal in the market. We want the market to tell us what it's going to do. We want the market to tell us what to do. So we're looking for a reversal signal in the market Monday or Tuesday, and that will tell us that that turning point was good. So hopefully that wasn't too confusing. I'll try and do it again with a different flavor, different methodology. I'm going to try and teach you a little bit about cycles over time, but this was the first attempt. So if it was a little bit choppy, I apologize, but I just wanted to, I had some questions and I wanted to give folks a little bit of a flavor for why I feel October 19th was going to be a potential turning point, plus or minus a day. And at this point, it's a plus 1 day, so it could leak into Tuesday. And that's really the whole ball of wax. So now let's take a look at a couple of the other markets we follow. IWM. The SPDR was up a little more than 1/3% today, yet the IWM was down a little more than 1/3% today. So that's just one of those things of note, a little bit weaker. It's nothing that we want to hang our hat on, but it is something that I want to make sure that we make note of, because why was the IWM down when the S&P was up, the Dow was up, and the NASDAQ Composite was up? Interesting. It's something we want to make note of. Is the market telling us something is changing? We're not there yet, but we want to make sure we make note of it and we see what happens early next week. How about the transports? The transports got walloped today. They got shellacked. They got taken out behind the woodshed. So that being said, the transports were down about 130 points or over 1.5%. I think that's significant, at least in my work. So remember, several days ago, I said I thought the transports were going to top out up in this zone. I didn't even think they were going to get up to this area. They didn't. They sold off, tried to rally back, sold off again. I think that's significant. It's not significant enough to hang my hat on just yet, but it's more significant even than the IWM or the Russell 2000 index, which is, by the way, Main Street American Business. What is Main Street American Business? Just as for the new folks that haven't heard me talk about that before. Main Street American Business is basically small and medium business across America. It's mom and pop. It's the heartbeat of America. That's really where we identify the broader market index, and it's really representative of a representation of small and medium business across America, not just your Dow stocks, not just your multi-billion-dollar corporations. It's the heartbeat of America. It's representation of American business, and that's why I like to look at the IWM. It represents where American business is going, and if money's coming out of American business, I want to know about it. If money's leading into American business, I want to know about it. And that's why I talk about the IWM. And the transports have always been a stalwart of a leading indicator in the market. So these are things that I want to make note of. I want to take note of them. They're important to me and my work, and where we can find leading indicators in the market and what the likely next move is for the market. And that's why I look at them, and that's why I talk to you about them. So this is where I stand with the market. That's a long-winded, almost 15-minute version of where we stand in the market. But since it's Friday night, I thought we would take a little bit of extra time and teach you a little bit, or try at least to teach you a little bit about cycles. And I'll do it again. I'm going to put some more thought to it, and I'm going to see if I can't be a little more smoother in teaching you a little bit more about cycles. I just tried to kind of wing it tonight and give you some significant cycles that I would been looking at for quite some time and why October 19th is important. And we'll certainly see over the next day or two, Monday and Tuesday, whether I'm right or not. Let's go over to the gold market. And we had a little bit of a pullback, but this is nothing to be concerned with. We're expecting the market to pull back. We're expecting the market to build energy and pull back a little bit, work off some of this overbought condition that we had on this move up, and then we can see a downward sideways move, building energy for another move higher into our $1,195, $1,200 target area. Nothing really new to report in gold. It's acting of normal market behavior in the gold market. We expect pullbacks. Nothing moves in a straight line. And we're just going to watch it into next week and see if we can't pick up another area. And by the way, those of you who were long gold should have booked some profit by now. I've talked about that a couple of times this week. But if we see a significant enough pullback, and we see another setup for another move higher, I'm not going to be afraid to even pick up a little more gold for that another thrust higher into the 1200 area. But there's really nothing else to discuss in gold. We just have to see this market pull back a little bit and then a setup for another thrust higher in gold. Let's go over to the oil market because this is a good one. Last night, I discussed the fact that we put in the doji candle in the oil market, which signifies a typical trend change or a typical signal of a trend change. And lo and behold, today we had another move higher. And so the trend change held true. And we'll have to see what happens early next week if we're going to try and make another run for the 50 or if this bearish pattern is going to hold true and we're just making a bearish consolidation for another move lower. We're in the middle of the range up here to here. So we're in the middle of the range here. So there's really not much to do in terms of a pattern that's telling us buy or sell crude oil. We have to see the market form a pattern that tells us what the next move is. So we'll be watching that over the next several trading days. Nothing new here other than the expected move higher off the trend change from yesterday, which also had come into the 50-period moving average. Let's take a look at the bond market. Let's go right to the continuous contract. We closed the week still inside the bearish pattern, and we'll start with the weekly chart tonight. Okay, this down move from the pivot high here, right up here, okay, this is a bearish pattern. We went sideways. This almost formed a weekly, or almost formed a bear flag pattern off the weekly chart, but then we had the spike higher, but we still maintain the level below this pivot high and below this trend line here. So this is still inside of this bearish pattern right here, okay? So we could still see another move lower, although, okay, let me get rid of these lines, although we could still be, and this is still possible, and this is a conflicting story in the bond market, a move higher, a sideways move to lower, getting ready for another move higher. So we have conflicting bullish and bearish patterns on the weekly chart. And if we go back to the daily chart, we'll have to see what happens early next week and whether or not this is just moving lower, okay, over the last couple of days, maybe another day or so lower for another move higher. Okay, and it could actually be, let me redraw that. It could actually be, okay, a up move, a zigzag, an A, B, C, and this could continue higher after a couple of more days of sideways movement for another move higher into this downsloping trend line. So what I'm looking for is if we move higher and we fail at this downsloping trend line, that's going to signal to me lower prices coming. If we close on a daily chart closing basis above this downsloping trend line, that's going to tell me we have a possibility for higher prices up and above the 162 area. So we're watching it. I'll keep you informed. Nothing to do right now in the bond market, but this is just what I'm looking at. I'm just trying to give you all the things I'm looking at and where the bond market might give us a signal for lower or higher prices coming. The dollar made another move higher today, and let's see where we closed today. The high of 94.79 and today's close was 94.75. So we were not able to close above this red bar here, which tells us that we're still inside this bearish pattern and we're still inside of a downtrend on the daily chart. So there's really nothing telling us that significantly higher prices are coming now. But it could be. We'll have to see what happens on Monday. But as you know, we had the pivot low. We had another low. But then the market came back down and broke the pivot low. Now we're above this area, but we don't have a good pattern telling us that higher prices are coming just yet. We need to see more evidence that we're going to see higher prices. And that would mean a daily close above this level here. And then another daily close above this level here. So the dollar has some work to do. There's nothing for us to do on the dollar at this point in time other than just watch it and try and let the market tell us what the likely next scenario is going to be. So there's a no trade right now on the short-term basis on the dollar. We're watching the monthly chart. We want to see where October closes in the dollar because we're interested to see how this bullish pattern, up move, sideways consolidation. We're interested. We don't really need these lines anymore. We're interested to see how the up move on the monthly chart plays out and where the month of October closes, and that's going to tell us a lot moving forward. So we're really just in a holding pattern through the next couple of weeks in October to see where the dollar closes for the month. Let's go to the daily chart of the natural gas market. And what we had was, let's just go back in time a little bit. We had these 3 bars down, said that was probably going to hold. Then we had a up move working off some of the oversold condition right up into the 20-period moving average. The market rejected the 20-period moving average, tried it one more time. Big down move yesterday, another down move today. We're coming into a double bottom area, and that's most likely what we're going to see on Monday. If I had to place my bets, I would say we're going to see double bottom on Monday. And if we don't, and the market heads up on Monday, let's see what that would look like. If I can squeeze a Fibonacci retracement in here, let's see what that would look like. It's too low on the chart. Let me try it. Okay. And, well, we've already come into the 7.5 retrace and below it. So there's no significance there. We're about the 7.5 retrace right here. My intuition, nothing more, nothing less, tells me that we're going to come into double bottom. And, there's really nothing good here. It's in a downtrend on the daily chart. Natural gas is daily chart downtrend. Weekly chart downtrend below all the moving averages, and certainly monthly chart downtrend. There's nothing to do here on a sustainable basis in natural gas. Intraday, for those of you that can trade natural gas in intraday, more power to you. Good luck with it. I don't do it, can't do it. It's the widowmaker. So this is about it. We're just looking for lower prices coming in natural gas on a longer term basis. So with that, folks, I'm going to leave it there tonight for the week. Have a great weekend. I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.